Good day, everyone, and welcome to this short recording on inventory adjustments. And we're going to specifically have a look at questions 8.8 to 8.10. These year-end adjustments dealing with inventory will first of all look at inventory deficit calculation and accounting. Then we're going to look at the adjustment for consumable inventories where the expense account was used to initially record the purchases. This third item will be the consumable inventories adjustment where the asset account was used initially. And then lastly, we'll do a comparative example of the two consumable inventory adjustments, just to confirm that we all understand. Question 8.8 requires a journal entry and then also posting to the general ledger. So I will just be dealing with the general ledger for explanation purposes, and then I'll show you the general journal after that. On the 31st of May 20.1, the balance of the inventory account in the books of Prisma Traders was 25,680, while a physical stock taking, so this we saw with our eyes, physical stock taking showed 25,440. The perpetual inventory system is used. We can actually only calculate the inventory deficit at year end if we are applying the perpetual inventory system, because we've got an amount that we got using our debits and credits. This is the balance in the inventory account. And then we've got an amount which we saw with our eyes, according to the inventory stock take. So which one are you going to believe? You're going to believe your eyes. So we're going to take our inventory account with the balance of 25,680. And now we have to turn this 25,680 into the amount that we physically confirmed with our stock take. So we will have to deduct an amount of 240 Rand from the inventory account, from the asset, as to not overstate our asset and leave it at 25. For every debit, we need a corresponding credit. So we will have a debit entry in an inventory deficit account. So this amount, we got it from inventory, and this 240 was taken to the inventory deficit. Inventory deficit is an expense account. So you can see if we balance the asset, we will have a balance carried over of 25,440, which is exactly the amount that we confirmed when we did the physical stock take. So the asset account will be balanced and our balance brought down 25,440. And then for income and expense accounts, this expense account will have to form part of the calculation of our final profit or loss for the year. So this account will be closed off to a profit and loss account at the end of the year. This part of the process where we close off all our income and expenses will again be dealt with in Chapter 9. Just to confirm that we understand the general journal entry, we had to decrease the asset account with the 240 Rand, corresponding debit in the expense account, 240. So you will see that in our asset account, we end up with the balance carried over brought down of exactly the amount according to the physical stock take. In our next question, question 8.9, we again need to do a general journal entry and posting to the general ledger, but I'm going to focus on the general ledger first of all. At the 31st of December 20.1, again the financial year end, this stationery account, and just to read very carefully, it's only stationery. There's nothing after stationery. That will become important a little bit later. The stationery account showed stationery of 450 was purchased during the year, and then a stock taking at the end of the year, 31 December 20.1 again, showed stationery of 50 Rand that was still on hand. If we compile our stationery account, they tell us that the resulting purchases, so we will have a total over here, calculated for the whole year, in the expense account, added up to 450. Remember, an expense account equals consumption. So I need to show them in this expense account the stationery that I've consumed during the year. But they tell me 50 Rand of this 450 has not yet been consumed. So I will have to credit the stationery account with the 50 Rand. And for every debit, we need a credit. So I'm going to have a debit entry in the stationery on hand account, which is my asset. So I took this to the stationery on hand asset because I have not yet consumed it. And this I got from my stationery account. Again, all assets will have to be balanced. So balance carried over 50 Rand. And the balance brought down, also 50 Rand. And in my stationery expense, you will see that your debits at this point are exceeding the credits. So I need a credit entry to close off this expense. And this will form part of the calculation of my profit or loss for the year, because this is the stationery that I've consumed for this year. This question, however, carries on to a section B, where we deal with stationery again, but now following on section A. And this is actually a very important example. If I have a look at what I will start out with in the 20.2 financial year. Remember, in section A, we had the asset not yet consumed of 50 Rand. If they start to tell me that during 20.2, following transactions took place regarding stationery, and I read here that on the 1st of March, we purchased stationery for 310. In real life, will you go and buy stationery if you know that you still have 50 Rand in the cupboard? No, you won't. So first thing that you do at the start of a financial year, you transfer this 50 Rand from the asset into the stationery expense account so that I can now start consuming the stationery that I had on hand from the previous year. So first of all, from my stationery on hand, I transfer the 50 over to the stationery expense. Now I can start to account for the transactions as they occurred during the current financial year. So I've got a purchase here, cash purchase, so that will be bank of 310 Rand. I've got a credit purchases, so creditors control of 285 Rand in my expense account. And now they tell me that at the end of the year, a stock taking revealed that now I have 74 Rand still unused. So if I let this expense account to include all these debits, do you agree they add up? All of these debits add up to 645 Rand. But that is not what I've consumed, because they tell me I still have 74 Rand worth of stationery unused. So it can't be part of my consumption. So I will have to transfer that to my stationery on hand. And for every credit, I need a debit. So there I have my 74 Rand. And this is a transfer of not yet consumed stationery at the end of the year. Can you see that I had to reverse last year's opening inventory, because at that point I started consuming the 50, so that I now only have a 74 Rand balance carried over, balance brought down. In my expense account, I want to close off. That means that both sides will be equal. I want to close off whatever I've consumed during this year, and the 645 minus the 74 that I still have left in my storeroom or in my cupboard will give me the amount that I've consumed for the current year, which should form part of the calculation of my profit or loss for the current financial year. In the general journal, you will see that the first thing that they do is the reversal of the last year's closing inventory of stationery, the 50 Rand. Then we account for the two purchases, both cash and credit. And at the end of the year, I do my adjusting entry again to transfer the stationery on hand to the asset from the expense. Remember, stationery on hand is the asset and the stationery is the expense account, so that I can calculate in the end what have I consumed in my stationery expense account. The general ledger accounts, just to confirm that in my asset account I end up with the physical stock take, and in my stationery expense account I transfer the consumption to the profit or loss calculation. Question 8.10 again deals with consumable inventories, but now if you read the information, they tell you the consumable goods inventory account of Electra Traders. So this is the asset account. They start off with the asset account. This asset account showed a balance of 13,860 at the end of the year, 28 February. An inventory count on the same day revealed that consumable goods of 1,350 were still on hand. So this manager decided to account for the consumables when they bought it in the asset account instead of the expense account. So we have a balance brought down of 13,860 because it's an asset. Now they tell me this 13,860 is not true because my asset is only worth at the end of the year 1,350 according to the stock take. So what do I need to do with an amount of 13,860 to get it to reflect only 1,350? I will have to deduct on the credit side 12,510. We know that for every credit we need a debit, so that 12,510 will be transferred to the consumables expense account. So I took this to my consumables expense, and this was transferred from the consumables on hand asset account. Can you see if I balance my asset account at this point? The debit side is the larger amount. I would need on the credit side an amount of 1,350, which is exactly the balance that was confirmed with the stock take. So I'm going to have a balance carried over, balance brought down of 1,350. And in my consumables expense, that is what I've consumed during the current financial year. Because if I started off with an asset of 13,860 and I counted only 1350, that means that the 12,510 was used, it was consumed. So this is my consumption amount, and consumption I want as part of the calculation of either my profit or loss. So that 12,510 will be closed off to the profit and loss, and we will again revise this closing transfer. This is a closing transfer in chapter 9. But I'm sure that you all understand it at this point. So let's have a look. They had an adjusting journal entry where we transferred out of the asset, remember the on-hand goods inventory is the asset, to the expense whatever we've consumed, and that was the difference between the balance that was provided and the balance that was counted according to the physical stock take. So the 13,860 minus the 1350 gave me the 12,510, and that was the credit entry in the asset transferred to the expense for consumption. If we can now do a comparative example, I just want to show you that if we use exactly the same information and one manager chooses to account for it in the expense account first, the other manager decides to account for it in the asset account first, the end result will be exactly the same. So there's no right or wrong way of doing it. You just need to make sure that you understand in each question which option they went for, and I'll explain that again. So they give me information regarding purchases of stationery and a stock taking, and we're going to do it simultaneously for option A, the one manager, and option B. In option A, we're going to account for purchases in the expense account. And in option B, we're going to account for the purchases in the asset account. On the 1st of March, we purchased stationery, 500 Rand cash. So that will be bank. This is according to manager A that chooses the expense account. Manager B will have exactly the same entry on the debit side, but of a different account of the stationery on-hand account, of the asset account. Now we purchased another batch of stationery, 250 Rand. This was on credit, so it will be creditors control. Manager B will have the same information, but in the asset account, 250. Now this is where the difference will come in. At the end of the year, a stock taking revealed 100 Rand of stationery still unused. So let's do manager A first, option A. If the expense account refers to consumption, so I want in here, what have I consumed during the year? On the debit side, it adds up to 750, but I know I have not consumed 750 because I still have 100 Rand unused. So I'm going to have to credit the stationery account with 100 Rand, and for every credit we need a debit, and that debit would go to the stationery on-hand account on the debit side. So this is now the asset. So I'm transferring from the expense to the asset the amount that is still on hand. Let's have a look at option B. In the asset account, I add up on the debit side 750 Rand worth of purchases. So now I'm saying this is not true. This is not the asset that I have at the end of the year, the 750. I only have an asset of 100 Rand. So what do I need to do with the asset account to turn the 750 into 100? I will have to deduct 650 Rand. And for every credit, I need a corresponding debit. So this I got from the stationery on hand account, and this I took to my stationery expense. So let's quickly prove that they will both result in the same thing. If I balance my asset account on this side, I will have a balance carried over of 100 Rand brought down of 100 Rand. Can you see this 100 Rand and this stationery on hand on this side will also be balance carried over of 100 Rand and the balance brought down of 100. So the asset accounts will have exactly the same balance, and that's what I saw with my eyes according to the physical stock taking. So that's my asset account. In the stationery expense accounts, I want the stationery consumed. So I purchased over here 750 worth of stationery. Of the 750, 100 was unused. So I will have an amount of 650 on the credit side to get this account to balance. And that will be part of my profit or loss calculation at the end of the year. Option B, in my expense account, I already have a debit of 650. So to close this account off, I will transfer that to my calculation of the profit or loss. So this 650 and this 650 is exactly the same amount of consumption. In a question, it is important for you to determine which option they went for. If the pre-adjustment trial balance states that the stationery account contains a balance or a total, that means that they went for option A. So they accounted for all the purchases in the expense account. If this pre-adjustment trial balance shows a balance in the stationery on-hand account, so on-hand means it's the asset account, they went for option B. So they accounted for all the purchases on the debit side of the asset account and not the expense, like option A. I trust that you found this informative. Please have a look out for more explanations. Have a nice day.